Hi, my name's Leanne Sino, and I'm a senior consultant here at Paragon Solutions, working in the life sciences vertical in the revenue management arena. Last time we talked about the quote-to-cash end-to-end business process in relation to the chargeback process. Today we're going to look at it in relation to disputed deductions. We're going to look a little more on the cash management side, the deduction management side, as well as your AR and AP. Here, where our process differs a little bit from the chargeback process or the traditional quote-to-cash process, is that our business process is starting here with a customer action that's triggered and is hitting our books on the cash side of things. Here the customer is taking a deduction on an invoice, various reasons for taking a deduction on an invoice. It could be a rebate payment they don't agree with, a discount that they thought they should have been able to take, so on and so forth. So they shortchange the invoice by a certain amount of dollars. And we're seeing that deduction up here once AR and AP is posting that cash. Once AR or AP is posting that cash to your financial statement, that offsetting amount either sits on the customer account or is posted to a disputed deductions balance sheet account or some type of other offsetting account. Here, if it is left on the AR customer account, we may have issues with the next steps here. It may not be as easy for gross to net finance to review this disputed amount. Reason being, it's sitting on the AR account, and unless your finance department is really reviewing AR and your AR aging balances regularly, you really would not see this amount. Here, if it is booked to that offsetting account, we'll see the actuals received here every month. Then finance reaches out to sales and marketing, because at this time, all finance has is an amount that was taken and whatever information the customer may have given. To really determine what type of deduction this was to begin with, we need to work more with sales and marketing or your contracting team, the folks that do the actual adjudication processing. And here an analysis is performed to determine the type. In this example, it's been determined as a shelf stock variance. Therefore, we lowered the customer price, and the customer wants payment based on what's sitting on their shelves due to the price decrease. Sales and marketing goes and speaks to sales and accounts, the liaison between they and the customer, and they say, all right, we're going to look at this, and we're going to attempt to reconcile this shelf stock variance, but we need a little more information from you. Here we're asking for some customer inventory data. We may or may not have had this data to begin with when we paid the original shelf stock, if it was paid at all. But we want to see what inventory was sitting on your shelves at the time of the price decrease. Here this inventory is received by the customer, either sent through the liaison or not, and heads back up to sales and marketing or contracting to do some analysis. Then a decision is made as to whether that shelf stock adjustment will be recalculated and paid for a marginal amount, whether it will be denied and communicated back to the customer, or if it needs to be paid in whole originally because it was never paid to begin with. Here in this example, we're recalculating the shelf stock adjustment. We had the wrong inventory numbers to begin with. A new reserve amount is booked for the new liability, so the marginal amount is booked. And then we're processing the actual in the rebating system. Once this is done, the customer receives a reconciliation report, whether manually or system generated, as well as a credit memo. At this point, the customer is whole. A couple more steps need to take place in order to make our side whole. Here, once that credit and debit is issued, it's posted to the customer account, but what we also need to do is analyze those actuals again, as well as ensure that this new marginal amount matches up with the deduction that was booked in the offsetting account, so that not only the customer is whole, but we are whole and our financial statement's whole as well. Again, some people may think of this as a one-off type process. Like we mentioned, it's a little strange because it does begin at the customer and hits our cash phase of the quote-to-cash business process first. But nonetheless, it is an end-to-end business process that needs to be considered when you're looking at documentation, mapping, internal control, cross-functional organization, so on and so forth. An easy tip, an easy way to not miss this when you're doing your business process review, assessment, optimization, is to sit down with these cross-functional teams, ensuring that you have the right people involved from each team, and kind of laying out a business process inventory, a list of any and everything that you can think of that happens day-to-day operations and one-offs, like this customer deduction management process. Again, my name's Leanne Sino. I'm a senior consultant here at Paragon Solutions. Today we got to look at another example of a quote-to-cash end-to-end business process, and that being customer deduction management. Thank you.